All right, so we got to talk about this news. The threat of tariffs on the EU kind of adding to the pot and the mix of other tariffs potentially on Canada and Mexico. But still today, this morning, we're seeing the DAX trading at an all-time high, the FTSE at an all-time high. Do you think the tariff threat, is that already priced in the markets in Europe and other countries as well here in the U.S., or is there more headline threat at least when it comes to tariffs?
So we would say that there is certainly more headline threat, especially in the overseas markets. But even in the U.S., we think that there's going to be a lot of uncertainty, not only with tariffs, but also with other policies that are going to be there, plus with inflation and rate cuts. So that is why, in our view, investors should be cautious in the first half of the year, where we could potentially see a pullback in the markets.
All right. The markets are on a bit of a streak. NASDAQ's up 2 days in a row. The S&P and the Dow up 5 out of the last 6 days. But you think there's going to be some choppiness and some volatility in the market. What causes this volatility? We've actually seen bond yields cool just a bit, a few basis points after some of these tariff threats that a lot of people thought would lead to bond vigilantes being worried about what's going on and bond yields rising. So what causes all this volatility?
I think there's a lot of uncertainty, first of all, plus the market is also vulnerable to policy missteps.
What's the uncertainty?
Well, uncertainty around policies, uncertainty around rates, uncertainty around inflation, plus there could be policy missteps, right? So even if, let's say, for example, they do tax cuts, but it's not retroactive to Jan 1, 2025, that could potentially cause scale back in business activity, deferment of business activity that could cause a pullback. And so for that reason, we think that the momentum names are vulnerable over here, and investors should shift their focus away from momentum more towards the value parts of the market.
All right. We got to talk about momentum, at least on the first trading day of this new administration. We saw industrials lead. Cyclical sector gained about 2% yesterday. A lot of that is based on the president saying he wants to see more manufacturing here in the U.S. So is that becoming a momentum trade, the idea of industrials, utilities, because we're going to need more power? We're obviously going to need more things built here in the U.S. to achieve the president's goal.
Absolutely. Even if you look at utilities, for example, with this artificial intelligence that we are seeing, data centers, we expect that the power demand from data centers is going to triple over the next 3 years. So the demand for artificial intelligence is going to skyrocket, and utilities and electricity, the demand for that is going to increase. So we really think those type of sectors will do fairly well.
All right, so you think they'll do well. Is it also based on Fed rate cuts, or is that going to move, in your mind, higher, regardless of what the Fed says coming up in a few days, and even if the Fed is hawkish?
Well, we think that, with the Fed, we will probably see 2 rate cuts of 25 basis points each this year. And the reason for that is that even though the tariffs are inflationary, we have other deflationary factors that are playing out as well. So, for example, we were talking about AI, productivity increases caused by that, reduction in government spending, which are deflationary. So for that reason, we think that the Fed stays on track with 2 rate cuts, and that'll be positive for the market.
You're a bit more optimistic than everybody else. I think only one is being priced in. You also have a pick for us, the way to play this theme that you see with more industrial expansion and manufacturing expansion?
Yes, absolutely. So we do like we spoke about utilities. We do like the XLU, Spider utility, which gives you broad exposure to that. We also really like Eaton, which manufactures equipment that is used to manage and distribute power. So with the demand for electricity going up, the demand for their equipment will go up. So that company, we think, will do well.